Hello, everyone. Today is Thursday, January 18th, 2024, and this is the Weekend Charts. Obviously, I want to thank all you guys and girls for being here. I appreciate you taking time out of your busy schedule to be here. So, what we're going to talk about? Well, current market conditions. I have a lot to say about that, as usual. Crypto conditions, too. Your questions on trading. Let me know if you have any favorite stock and crypto picks. We'll take a look at them. Just enter them one at a time. That's all I ask, and that's for your benefit. I'm going to continue my series on things I wish somebody would have told me when I first began trading. And that's kind of how I approach teaching, as I tell you what I think you should hear because it's what I think I needed to hear. I did get a question about issues with trading crypto relative strength, and that'll make a lot of sense in a minute. I'm going to flesh that out quite a bit. By the end of the presentation, you should know how to trade crypto using relative strength. For our Crypto Corner, I want to go through my entire open portfolio and how I got there and how things have changed as of late. And it's not as good as it was, but crypto changes quickly, as you likely know. Q&A, if you have any questions, just let me know. And I'll see if I can do them on the fly. And if not, I'll put them into next week's show. If you'd like to attend live, you can go to dayland.com/webinar. Now it's being simulcast on YouTube, so you can check that out too. And if you're at YouTube, at Dave Landry, make sure you subscribe. There's my TikTok and X. The disclaimer screen, as you know, you can lose money trading or as often summing up. All predictions are about the future. And a lot of stuff can happen between now and then. All right, so I received this following question. I find myself entering crypto shitcoins on BO/moves near the high of the bar, and they rarely keep going. Is that just the nature of a move that does not work and one to get out of immediately, or should it be more patient? I notice you seem to get out pretty soon if the price action does not continue to grow. Here's an example, just one. I entered at the high and it's come back in. Coincidentally, you will notice that in the past, the same thing happened to me, and I decided to exit, and then of course it continued to continue the move. Okay, so I'm gonna have a lot to say about this. This is this crypto he was talking about, LCX, which ironically is one that I got long on this wide range bar here, and I'm going to flesh that out in just 1 second, and we're going to come back to his question. A couple of random thoughts first, though. If you're trading relative strength or breakouts, now by relative strength, I'm not talking about some sort of indicator. We're just looking to buy the pairs that are up the most. Now, we haven't been in an RS market in stocks in a long, long time. 1999 would be one of the times it comes to mind. Maybe a little bit over the summer, last summer, believe it or not. Selling May crowd was certainly wrong on that. But for the most part, stocks haven't been in an RS type of market in a long time. That means everything's just going up, relative strength. And when you're in that relative strength kind of market, kind of zone, you can pretty much just buy stocks that are going up, and you're buying the strongest one, or crypto, or whatever the case may be. But it is a tough way to trade because you'll be in the hunt a lot, okay? Meaning that you're going to be really close to catching the mother ball winners, but you get knocked out, and then you watch in anguish as the market takes off without you. I don't think I could be a pure breakout trader because you're going to be so wrong so often, and then again, you're going to see a lot of markets take off without you. Now, breakouts, it depends on how you trade them, but they do sort of guarantee that you will be in the strongest markets and in the greatest of all trends, but you might get knocked out 3 or 4 times and then give up before that happens, and I'll flesh that out in just 1 second. If you look at like something like the buy at B, that has a bit of a breakout characteristic to it for IPOs, and that all but guarantees you that you're in the hottest IPOs, provided, of course, it's a big caveat that you don't get stopped out first. Now, near misses on IPTs seem to be really common, and I'm going to show you quite a few in just a few minutes that happened to me recently, and that can be kind of frustrating, and there's probably some things that I should have done in the process, but I want to show you what happened to me. And the other thing I'm going to show you tonight is I'm going to show you quite a few losses, and one thing I wanted to get to is I want to show you that lately there's been quite a few losses in stocks, and that's been a little frustrating too. But if you keep chipping away at it, you're eventually going to have a pretty decent looking portfolio, and that takes a little time to develop. And I'll show you my crypto portfolio, which was from that process. Now, you're going to be wrong way more than you're right as a general statement, okay? But you can occasionally print money and be super right. Now, I finally caught a few big winners, decent winners, after being wrong quite a bit. And if you rewind back to where a lot of the setup, spoiler alert, I'm going to show you, they all set up around late November and somewhere between there and December of last year, late last year. So you can be wrong way more than you're right. It's kind of a tough way to trade, being wrong a lot. The good news is you can take small losses and take a few stabs at things, so you're not really losing a fortune. Yes, bad things can still happen, but as a general statement, you can be wrong quite a bit and still do okay longer term. And again, the caveat here is going to be, you really want to be in the markets when they're on fire, when you're in a momentum market and everything is just kind of going up. And I'll give you a hint, right now, crypto is not that, but it can change very quickly. And I'll show you some tools in a few minutes on how to keep an eye on that. Like all trend trading, it does depend on the occasional outliers. I just got an email from somebody who said, Dave, trading stocks is not for me. Well, they came in, they got a few losses, and boy, they just like, I'm not gonna do that again. The definition of insanity is doing the same thing over and over again and expecting a different outcome. With stock trading or trading in general, a lot of times you are a bit of the definition of insanity, and that's okay as long as you are trading properly and picking the best stocks and following proper money management and all that other good stuff I talk about all the time. But yeah, it does depend on catching the big outliers. That's one of the issues that I have with my educational business for my methodology, is people who complain, especially even in good times, or even in good times, depends on how you want to look at it. But sometimes I'll get people of like, well, I can't make any money. It's like, okay, well, did you get this winner here and this winner here? Nope. But I took all those sneakers you recommended, but I didn't take those two winners. Well, I'm not saying that it always works, because it doesn't always work, and it hasn't worked extremely well lately, but longer term it does work as long as you're catching a few of those winners. And that's the really tough part, and wrapping your head around the methodology, and even more so, or even more important, is living with it. And that living with it is pretty tough. And that's one of the things that I want to add to my things I wish I knew about trading a long time ago, and I didn't get around to add it to this week's, but it'll be in next week's or subsequent weeks, is that it's harder than it looks. And the other thing I was thinking about is I grabbed a shower right before I came in here, and while I was in the shower, I was thinking that I would imagine the more novice trader thinks that the more experienced trader has it all together and doesn't get upset and doesn't get frustrated and down in the dumps, or whatever you want to call it. But they do. And I know a lot of smart people in the industry who go through drawdowns, and I don't ask them personally, how you doing, but I know how they're doing. I know it's painful, and it's a very painful process to lose money and have losing trades. That comes with the territory. Now, again, you want to trade RS breakouts when the market is in breakout mode. And again, I'll show you a few tools for that. Right now, it's not, okay, but there have been a few opportunities lately, but there's also been a few that have stopped out, or quite a few that have stopped out. So I feel like lately in crypto, I've been treading water quite a bit. I'm sitting on some big winners, but for the most part, I've been treading water. And those big winners are probably helping out to smooth out the bumps a little bit. Now, if everything is blowing and going, and you'll know when that is. It's like a new bus comes along every few minutes. You load up your portfolio with all these hot pairs, and you run out of room, and you're seeing something else you want to buy, and you just don't have any slots available, so to speak. And then you hit an IPTs, and then it's like, okay, well, I could take a half a slot and put in one of these, and you're going to see a bunch of really small positions in a minute. By the way, don't bet the farm in crypto, okay? I'm trading in a very small way, And I think that if it goes into this crazy bull market as it has last month, if it does that next month and then hopefully a few months after it here and there, then I think a small account is really all you need, because it is a dangerous market. It is a crazy market. A lot of these things will go to zero, okay? But trading is trading. And I think you can learn a lot about trading by trading a market like that. But again, if everything is blowing and going and you keep running out of space, a new bus is coming along every few minutes, so to speak, then you probably want to keep positions on a short leash because they are taking up space. And that reminds me of like 1999. If you had anything that was losing your portfolio, just get rid of it, because so many other things were just taken off. Now, there is a danger in that, and I don't want to get into too many details on that, but I am working on a piece about mediocre trading. And when everything is going crazy like that, you can get sucked in to chasing too many stocks. But for the most part, you do want to wait for a market, and this happens again more often in crypto than stocks, when they're just all kind of going crazy. The emotional makeup of the market in crypto is made up of a lot of skittish type of people, and everybody wants to get rich quick. Now, keep in mind, those players are going to change over time, especially now that they introduce the spot beat ETFs for Ethereum and Bitcoin. They'll probably introduce a few more too, because everybody's trying to get that money grab. And I'll talk a little bit about that when we get to the live charts. Now, when conditions aren't fantastic, like now, you can sit on your pairs a little longer or bail and wait for conditions to improve. So it's okay to get kind of in and out. And I don't have a definitive plan, as I'll explain in a few minutes, on this relative strength trading, other than buy the ones that are going straight up when they're going straight up and conditions are good. Now, this is kind of what I'm getting to. It's not rocket science, but it's also not exact science, okay? And it was funny, a while back, a rocket scientist, literally a rocket scientist, emailed me and he said, rocket science is rocket science. He goes, rocket science isn't rocket science. Trading is rocket science to him. It's because his mind worked in a certain way, and it's very hard to undo all that logic. I noticed earlier, right before I went live, somebody was talking about stocks in a forum, and somebody recommended fundamentals, and I'm thinking like, no, that's not how markets work. That's not how any of this works. We'll throw it back to, who was that, Beatrice? Now, keep in mind that every style has its own nuances. So breakouts, sans a runaway RS market, will fail a lot. And even in a runaway RS market, you'll still get quite a few failures, but you won't care because there's so many other pairs that are moving in crypto. And if we get back to like a 1999 in stocks, that would be great too. But I think that's less likely to happen than in crypto. And one thing I wanted to mention earlier, just getting back to the people behind the charts, the people behind the bars and the charts, right? The crypto crowd is very speculative type of crowd, okay, right now, but that's going to change over time, especially as some of these coins become actually viable and mature a little bit. Now, getting back to nuances in trading, selling options and reversion to the mean trading are two examples of a type of trading that will give you a very brilliant but brief career, and it'll work quite nicely until it don't. And that's because you eat like a bird, as the commodity adage goes, and you shit like an elephant, meaning that you take these huge losses every now and then. Your potential losses are unlimited, but you're only getting really small gains. And once you get whacked, it's very hard to recover from that, mentally and monetarily. As I've said before, ad nauseum, the pure reverse, well, let me just rewind it. I get more clients from pure mean reversion trading than any other methods combined. And that's because it's a very tough way to trade. And believe me, trend trading is also a any trading for that matter is a tough way to trade, but trend trading is a very tough way to trade too. Trend trading often isn't very accurate, but it's the only way to make money in the market. Well, I'm a contra trader. Well, guess what? A new trend better come along, because you have to sell higher than you buy or cover lower than you short. So one of the secrets to trading that's not a big, huge secret is that you have to fully wrap your head around what you are doing and do it and just do it. Easier said than done. All right, let's go back to the question. I have a bad habit of kind of going around the block a little bit and not answering the question, but I thought a little background information would help. And then I think going through my crypto portfolio is going to help too. I thought that was silenced. Sorry about that. I did silence it. That's weird. Okay. I keep finding myself entering crypto shit coins on breakout moves near the high of the bar, and they rarely keep going. Is that just the nature of the move that does not work and one to get out of immediately, or should I be more patient? Well, if you're trading relative strength, you have to be willing to get back in when the pair takes off again. Okay. So he got knocked out of LCX, and what's ironic is LCX is one of my few winners as of late. LCX was today, and ENS was a few days ago. And those are the only two winners that I could think of recently that took off. So, two things. One, if, as I said earlier, the market is blowing and going, then he might want to get out of ones that aren't moving because so many are. If things are a little bit more mediocre, then he might give them a little bit more room. And then at the same time, you want to be super, super duper selective before putting any new ones on. So there's no definitive answer there. I think if the market's really not moving, or all the pairs really aren't moving, then it's okay to bail on one that's not working out. The caveat is if it takes off again, be willing to treat it like a new trade in and of itself and forget about the past. If you can figure out a way to forget about the past in trading and only look ahead, that's another one of those secrets too. I noticed you seem to get out pretty soon if the price action does not continue to grow. I'm going to show you a bunch of ones where I did that. That's not necessarily a rule, but if things are really doing well, I will do a lot of rolling through them. And sometimes when I'm sort of jockeying for position, trying to just finally catch a trend, I will go through quite a few pairs. And I'm going to show you that in just 1 second too. So he gave me an example. Coincidentally, you will notice in the past the same thing happened to me, and I decided to exit it. Then, of course, continued the move. And that's the thing that I said earlier. So he's right about that. That's one of the problems with RS. You're getting out, and then you see a takeoff without you. And I put the two little lines in my chart, one where I enter and one at my initial profit target. And sometimes I go through these cryptos, and it gets kind of, I kind of get a little bummed out because I'm looking at it and I'm going like, damn, I could see where I got in and got out on this thing. And then this thing is doubled or tripled from where I initially traded it. So you will be active enough to where you're going to miss some moves and be bummed out that you missed them. So you really have to wrap your head around the nuances and learn how to live with them. And as a general condition, I would wait for conditions to improve, and that happens quickly. So today's the 18th, somewhere between now and the next week in charts, which is on the 25th, conditions might really improve, and we might be really rocking with Dokken playing these relative strength moves. So again, wait for conditions to improve. I would use Bitcoin as your bellwether, and we're going to take a look at that in 1 second too. And pay careful attention to the day-over-day price change. See how much green you have at the top of your screen when you sort the pairs by the day-over-day price change. It's just a simple, what percentage change did these pairs change today versus yesterday's price, day over day again. And then online tools such as cryptobubbles.net. I just discovered this a couple days ago, it was 2 days ago, and I have it up on one monitor at all times. It's just the coolest thing in Cool Town right now, and I'll show you that in 1 second too. All right, so let's take a look at my crypto portfolio and see if we could maybe glean a few things that might help out this gentleman with his relative strength trading and crypto trading. So here is DESO. And this is one, again, I just bought when it was going up. Look at that, middle of December. And you can see it did kind of do a little stutter step. Now, sometimes I might get shaken out of that, but I will be willing to get back in when it really starts to break out again. And then the IPT, right now, just to keep things simple, because these things are so volatile, I'm just using a flat 20% initial profit target. Now, over time, as some of these mature, they're going to probably be a little bit less volatile, and maybe I'll have to adjust to the volatility. And possibly, too, I need to adjust the volatility on some of these crazy volatile ones. But right now, they're all pretty crazy volatile. So you can see right there, I sell half of the position at 20%, and I get my stop up to break even. So the worst I could do, barring overnight gaps, is scratch out on a trade. Same sort of money management as my core methodology. The only difference here, as far as the methodology is concerned, is we're buying the strongest pairs as they are banging out new highs, okay? If something's bouncing off a low, we're not going to mess with it. That might be a methodology for somebody else, but it's not my cup of tea. So I would prefer to buy them as I go into new highs where everybody's getting excited and a lot of people are getting sucked in. But I'm taking those profits just in case and not getting too caught up in the euphoria. Now, here are the trades. You can see in this particular case, I probably had another slot open. I'm sorry, I probably had no slots open, so there was only a $500 and change trade, and then a couple of cancel orders, and then for some reason I had an initial profit target in there, and I canceled it. And I noticed today, as I was putting together this presentation, that I still had on a full position, so to speak. I guess I saw such a small dollar amount, I didn't realize that I didn't take partial profits. So I actually took partial profits today on a stop. And let's see what's here. So you can see the run from where I got in to the peak was 100%. And then I took half profits today, right around 79 or 80%, somewhere up in there. I got stopped out on half of the shares. So here's, again, this is one of the few that I remember from recently as recent winners, ENS. And I made the mistake of looking it up, and I thought it makes sense. And it's the first one I actually think I might have ever understood how it works or how it performs a service. So I thought that was kind of cool, which is probably a big mistake. Don't confuse the issue with facts is my mantra, as you probably know. So again, I set an IPT at 20%. And these lines that are already in the chart for the entry and the IPT, as soon as they enter a pair, I'm usually pretty disciplined about this. I put in a red line for where I enter, and then I put in a green line for my initial profit target. And I also, of course, put that order in for the initial profit target. Why I didn't take profits on that prior one at the 20%, I don't know. It was kind of a happy mistake. Believe me, I make a lot of mistakes, and most of the time there aren't happy mistakes. Who was it? What's his name? Bob the painting guy. Bob Vila? No, Bob Vila is the home guy. Bob Ross. So you make, every now and then you make a happy little mistake. For the most part, you don't. You had a trailing stop on half. Yes. Keith wants to know if I have a trailing stop on half. I do. It's probably more of a mental one. I don't adjust them higher. I don't put in hard stops on these things. I will set alerts to let me know, and I do pay careful attention to what they're happening. I check it fairly often. I have the app on my phone, and I'm when every chance I get, not every chance I get, but quite often I am looking at these things. But you can see again, so only $1,000. You flip out half, well, you make $100 on that half. So that's better than a poke in the eye, especially if it happens in one day. Well, $100 in one day, what's that in a year? Well, crypto trades 365. I'm used to the math for stocks. The math for stocks will be 25,000. 365 times 100. It should be able to do that in my head. That's $36,500 a year. So I know it's not, it's nickels and dimes I'm dealing with here. but it's kind of my ongoing game and want to have fun with this. And you know what? This is probably why I'm so good at it. Not that I'm bragging, but I'm pretty good at it because compared to myself, not compared to others. Okay, I'm just compared to some of my other trading where I really get stressed out. I can really give a shit about crypto trading. By the way, that's the secret of trading too. It's not giving a shit, but not blowing up at the same time. I had a friend of mine who didn't give a shit. He ran about $5,000, which I later would find out was of questionable origin, to about 1 million. I saw a statement at 990 something thousand. So I think it's safe to say intraday he probably went over a million. Unfortunately, he blew up. And it's kind of like I was thinking before we went live, Curtis Faith was in an interview. It's like he was able to make a lot of money because he didn't give a shit, but the same attitude caused him to blow up. So you got to figure out a way how to not give a shit, but then have some serious money management in place. And you have to learn how to become clinically dispassionate. And Larry Williams has a really good quote on that, which I'll dig up and I'll put in one of these upcoming presentations on things I wish I knew. But the bottom line is, paraphrasing, he says, in order to trade, you have to not care. The more you care, the worse you do. And amen, that's very true. But you can see nice little move, 58% in 3 or 4 days, much better than a poke in the eye. And this is what's possible in crypto. Now, don't bet the farm. A lot of these will probably go to zero. And I get those arguments. Oh, it's all made up. It's all bullshit. Probably is, okay? You're going to find your best trades come from the most bullshit markets, okay? And again, if you, like I said earlier, the fundamentals, like try to find a stock with good fundamentals. It might take that stock years and years to take off. And in the meantime, competition could arise. We could have a bear market. A lot of things could happen between now and then. And I'm going to circle back to that in just 1 second, too. So here's another one, SEI. This was kind of all over the place. I bought it here. The IPT, the green line's 20%, sold half, and it really hasn't done much since. And again, you know, this is nickel and dime stuff, but if I could make it work, I think it'd be kind of fun to see how far I can run these accounts. So again, that's 52% in just a few days, better than the poke in the eye. Now here's the Mac Daddy going way back to November, and this hit the IPT within 1 day. Unfortunately, this was a tiny position size. And I have a small crypto account. Then I have just, I think, two more smaller accounts. And so there really wasn't a whole lot in this account. And you can see there's the trades right there. Not a whole lot money-wise, but percent-wise, pretty impressive move. So that's a 550% move. This is what's possible. Now, I'm not saying sell the farm and go do this. Quite the contrary. Take a small amount of money and do this and get the reps in and learn how to trade. Learn how to trade hot markets like this. I think the bread and butter is still going to be in the stocks longer term, but I think in the interim, as crypto heats up and cools off, some nice cycles can be caught. So still up about 455%. I know it's fuzzy math because it's not big numbers, but it's big numbers based on the move caught. And the bottom line with trading is if you can learn how to catch moves like this over time, you're going to do quite well. So yet another one, INJ, IPT was hit, and it's just kind of been dead money, so to speak, ever since. But we're going to stick with it and see what happens. By we, I mean me. So that was a 66% move, and then again, it's backed off again. So now it's up about 35%. And, you know, annualized, that's still pretty good, right? Now, here is the same stock. I think it was Hal that was asking the question, or same crypto, and he got in and out a few times. And then on the final big move, he missed the move. And again, that's the tough thing about this RS trading where you're buying the strongest pairs. And believe me, I drop a lot of F-bombs because I miss a lot of moves because you're in so many different pairs and you can't let it wear you down. And believe me, I'm going to show you quite a few losers here in just 1 second. So this was another one where this is a 1 day IPT, 20% move in 1 day. You sell half and then you wait and see what happens. Stop out at break even. And as Keith pointed out, yeah, you do trail a stop higher on the remainder. So something like this is starting to lose steam. I'd be looking to get out fairly soon. So probably if it drops below this 30 EMA, and at the most, probably this pivot point here, I'll go ahead and bail on that one. Once you're free rolling, so to speak, in a position, I like to give it room to breathe just in case it's catching its breath and it's going to take off again, make a base, and then launch into space, which is Ralph Alcampora. I thought it was me, but it's Ralph Alcampora that says that. I met him a while back. He's a trip, by the way. So anyway, there's the trade, $1,000 in roughly. You can see that was probably all the money that was left in this account because I had other pairs on. Yeah, that was in the middle of December where everything was going crazy. But it hasn't done anything really wrong just yet. It's only probed that 30 EMA once since way back in December. Well, actually, probably much further back than that, way back in November. Okay. So again, crazy move, 115%, and now it's only up 54%. Now that's a pretty steep drawdown. Obviously, as I was going live, I'm like, geez, that's a pretty big drawdown. If you were up 150%, and that's at the peak, and now you're only up 54%. But that's what these things do. They just trade all over the place. And in this case, even though it's lost a tremendous amount of value, it's still an uptrend. I know it's hard to believe. It's consolidating, going sideways right now, but overall, it's still an uptrend. Now, keep in mind that getting to those winners might take a few stabs, and it might take a little while. And like the gentleman earlier, I have to look at his records, but I think he's fairly newer to my trading methodology and fairly newer to trading service. And he said, this is just not for me. And he says he loves what I do, but it's not for him. And it's not for everybody. And trading momentum is tough. And believe me, it's tough for me too. Okay. It's like I always tell people, it's like I feel your pain, because if I'm getting stopped out, I know you're getting stopped out. And it's like a double whammy for me. I feel bad for myself, but I feel bad for you too, because I was partially responsible, right? Now, getting into a few winners again might take a few stabs, and it could take a little while. And that's the thing, again, with stocks. It's like you chip away at it, chip away at it, chip away at it. Like Douglas says, who I'm going to quote quite a bit in just 1 second, a good salesman will make a sales call, get rejected, make a sales call, get rejected, maybe make 2 or 3 more sales calls, get rejected, go get a big cup of coffee and sit down and says, all right, next, because he knows he's getting closer and closer to the kill, to that big sale. Whereas a bad salesman will make several calls, get rejected, and then he'll go drink his lunch. And so that's the difference. As long as you're not just trading, chasing your own tail trading, just trading anything or whatever, as long as there's a method behind your madness and you get stopped out, if you get stopped out a few times, then maybe you're getting closer and closer, or you should be getting closer and closer to catching the next big winner. But the last, like I said, I've only had 2 recently that hit the IPT. I used to wake up every morning and see 2 or 3 of them overnight had hit the IPT, and I'd come in and start trading at the crack of dawn and bang out a few more sometimes before I hit the gym. But that hasn't happened in a while. So here's a case. This ICP, when I showed a minute ago, you could see back in December, try number 1, I lost $12 in the trade. Try number 2, I made $54. And then the one that's open now, I have $369 plus $770 is the mark to market. So, and I think that's open profits. I'm not exactly sure. That seems a little high, but that might be, the mark, it's worth $770. Okay. So I made $369 and the position's worth $770. So that's probably another $220. And again, annualize this ain't too bad. So, but let's take a look at some recent trades. Now, here's what can be frustrating, and I haven't solved for this, and usually I will, when I remember at least, I'll put an alert fairly close to the IPT so I don't miss it on a nick. And I ended up losing money on this trade, even though it came really close to the initial profit target. Here's another one, kind of deja vu all over again. It came really close to the IPT, and I actually ended up losing a little bit on this one. So this one should have been exited based on a little discretion. Now here's one I think I got sucked into it. This wasn't at a new high, and it wasn't in a perfect pullback situation, but it looked like it was moving. And when I got in, it was pushing, it was making new highs at the top of this candle. I figured, oh, it's going to at least go to its old highs, which should give me the IPT. Might have been a little bit of intuition on this one. But you can see, again, I stopped out at a fairly small loss. Another one here, and this one took off quite a bit, and it's pretty close to a near miss. And I remember thinking, this thing, oh, look at this thing go straight up. Whenever you find yourself saying, look at this thing go straight up, the little tiny Elvis is like, look at that move, it's huge. If you're doing the tiny Elvis thing, you catch yourself doing that tiny Elvis voice, then you know you're getting close to getting whacked on that trade. Whenever you feel, you should never really feel really good for long, because if you do, you got to be really careful. And believe me, I get cocky quite a bit. I got cocky not that long ago. I was talking with somebody I know. We were real close. We talked trading a lot. And I got a little cocky. We were going back and forth. He was printing money too. And, as soon as I start feeling like that, I get creamed. But again, another small loss. Spell when a silent SH happens. Here's another one. You can see bought it, shot up a little bit, but then came right back in. And I don't know exactly where my IPT was on this one because I didn't put it in for some reason. But it looks like it did make a favorable move. And yet another one, you can see this one, I bought the high. So that's what Hal was complaining about. It's like, hey, I'm getting the high tick on these things. Well, guess what? If you're trading relative strength, okay, breakouts, relative strength, then that comes with the territory. You're going to get the high tick. Now, what I would recommend you do, and it'll be fun. I know you want a part of it, but it'll be fun to see if I add up those losses of all those losing trades I just showed you, and it'll be fun to see. And I bet it's going to be okay. You take those two winners, one of those might really take off. Maybe both of them will. Who knows? Okay, I think E&S is stalling out a little bit, but maybe one or two of those winners will pay for all. And I think it maybe already has. And that's the RS trading. And again, it's easy and fun for me because I don't have a lot of money on the line. Now, in the past, truth be told, when I started really printing money online and online with crypto, with the crypto, when I had like an offshore account with KuCoin and stuff like that, that kind of blew up after a while a little bit because I was getting a little too full of myself. And so that's the thing. As long as it's small, it's nice and easy. And I would encourage you to do the same thing and then slowly build over time and don't get too cocky. Now, here's what I want to show you with Bitcoin itself. So let Bitcoin be your bellwether with this stuff. So you can see the big blue arrow was pointing higher. Notice down here, this is 30 EMA Landry light, meaning the lows are greater than the moving average for uptrends. And then the highs are less than the moving average for downtrends. If it intersects the moving average, then the Landry light is 0. But you can see now we have a couple of bars of downside Landry light. And also, you always want to look at the chart, right? No matter what it says down here in these indicators, okay? Always look at the chart and draw your arrows. And you can see that we have gone sideways quite a bit. Now, there was a lot of excitement about this Bitcoin ETF, or ETFs being approved for spot Bitcoin. And now there's a half a dozen of them. Kathy Wood launched her own. What's the name of the GBTC? Is Greystone? Is it Greystone? I should know that. Gray something. But GBTC is another one of the ETFs for spot Bitcoin. And it looked like it was a buy on the rumor type of situation where Bitcoin ran from 27.5 to 50K almost, 47 or 48K at least. And then this was the day they announced things. You can see it spiked higher and then came back in. I think longer term it's going to be okay. The only negative I can think about is when you start creating more and more derivatives, then that kind of takes money out of the market and creates a lot of paper Bitcoin. That's the only scary thing there. If I had my choice whether or not they should have spot ETFs, I think they should, okay? But it does concern me a little bit, the amount of paper Bitcoin, so to speak, that could be created from that. And I think there's a lot of paper Bitcoin out there. I think they've already busted a few brokerages that have bucketed your orders, so to speak, because I guess they realize that most people will lose money anyway. So why bother actually buying the underlying product? Anyway, the point here is Bitcoin is losing steam. I wouldn't call it down and out just yet. Maybe pay attention to the bow tie moving averages, which we could take a look at in just 1 second to see where they are. And here's my new little fun tool. I was using crypto.com, had a sort on it, and I was using it for a while, and I can get you that link if you're interested. And then I just kind of stumbled across this a few days ago, and I absolutely love it. And here's the one thing that I was looking at right before we went live, is that you only have a few in here, and actually a couple of more turned green before I did this capture. But when I was looking at it and started thinking about doing a screen capture, there was only like 1 or 2 in here that were green. Look at all the red in here, okay? So this tells me that we're not in that runaway bull market phase, but stick around, okay? Like the weather, it could change in 5 minutes if you don't like it, right? Now that works both ways. Now, some of the gleamings when I put all this together today was that most of my bigger winners were from November and especially December. Well, what was happening back then? Go back and look at Bitcoin, go back and look at all the other pairs. They were all pretty much going straight up. That's the market you want to be trading. So based on Bitcoin and crypto in general, now's not the best time for relative strength trading. That's okay. Get educated, and when the markets take off again, you'll be ready. Okay, any questions on all that? I knew I threw a lot at you quickly. I will go to the live charts in just 1 second, and I'll flesh out a few of these concepts. And then let me just check YouTube. Okay. All right, we're good. All right, fantastic. So, as I mentioned earlier, and pretty much everything I do, content-wise, is based on what I wish somebody would have told me a long time ago. When I talk about stocks and setups, I talk about what I like in the setup, okay? Years ago, I thought a setup was a setup as a setup. Okay, you got A, B, C, D. Yeah, then I should buy this. No, it doesn't work that way. You have to find the best of the best. So along the lines of what I wish somebody told me, a few weeks ago, I woke up and this was in my head, and I just started writing, and I got 20 of these things out really, really quickly. And if you go back a few weeks, I went through these really quickly. But we're going to flesh all these out, and every time I do this presentation on these, or think about trading, it's like I just keep adding more and more, but that's okay. There's a lot of things I wish somebody would have told me a long time ago. And those are 20 of them. So picking up on where we left off last week, there's nothing to fear in the markets. I know, haha, yeah, right. The fear is actually created within. And I picked up a couple of good quotes from Douglas on this, the late, great Mark Douglas. I only spoke with him once on the phone. There was a third party trying to put us together to do a product together. And unfortunately, it fell through, mainly, I think, probably because of third party's fault. But that's another story altogether. 2 drink minimum on that one. And, you just think people are going to be around forever. So I was like, well, I'll hook up with Mark some other time. I guess I shouldn't use that term anymore. I'm always telling my daughters, did you hook up with your boyfriend? Dad! Market information is only threatening if you are expecting the market to do something for you. Amen. Otherwise, if you don't expect the market to make you right, you have no reason to be afraid or of being wrong. And like last week, I showed the horrible bear market that Coco went through, and nobody here seemed to be upset about it. Like, that didn't bother me at all. Well, because you didn't have a dog in the fight, right? And once you start quoting Mark, really hard to stop. When you really believe that trading is simply a probability game, I know. It's like came in this morning down $4, $5 on Burke, dropping F bombs, right? Bottom line is, hey, and I had this quote in my head because I just written it down. It's a probability game, shit happens, and that's some of the shit that happens. But when you really believe that trading is simply a probability game, concepts like right and wrong or win and lose no longer have the same significance. That's a little esoteric, a little hard to wrap your head around, but if you can accept it on face value and repeat that to yourself as you're going through the ups and downs, your life will get a lot easier. As a result, your expectations will be in harmony with the possibilities. And that kind of circles back to you just can't really give a flip, okay? And that's easier said than done, especially for somebody like me who's super emotional. I cry like a schoolgirl when forced to watch a Nicholas Sparks movie, or when I willingly watch a Formula One racing documentary. Not a big Formula One racer, whatever fan, but these documentaries are just amazing. Unfortunately, little spoiler alert, most of them end badly. Watch the one on Cena first, then watch the one on is it Schumacher? Schumacher's was excellent, but Cena's was really good too. And Schumacher's childhood idol was Cena, ironically, but good stuff. Keep in mind that nothing has more potential to cause emotional discord than our unfulfilled expectations. I'm just thinking out loud here. My wife expects a lot out of the human race. She expects a lot out of everyone, and I can't go into any specifics, obviously, because I'll get in a lot of trouble. And I just simply don't expect a lot out of anyone. In my life, as far as that aspect is concerned, is far better than hers. She just expects everybody to do the right thing, to be kind of normal or whatever. And that's just, those expectations are way too high. Let me repeat that. Keep in mind that nothing has more potential to cause emotional discord than our unfulfilled expectation. Emotional pain is the universal response when the outside world expresses itself in a way that doesn't reflect what we expect or believe to be true. As a result, any market information that does not confirm, our expectations is automatically defined and interpreted as threatening. That interpretation causes us to adopt a negatively charged defensive state of mind, where we end up creating the very experience we are trying to avoid. There's a lot to unpack there, but at some point, and I've gotten to it before, but at some point I want to point out that there's a neurology in this. And when you're having these negative observations and negative things happen to you, even in winning trades, believe it or not, it begins to wear you down quite a bit, because a negative emotion has twice the impact, and many people say many times more, than a positive one. Now, speaking of emotions, markets are emotional. People buy and sell stocks for a variety of reasons. Occasionally, they might even have something to do with the market. As I've said 1,000 times before, way back in the day, Dick Fruth, a good friend of mine, he's running a couple $100 million, I believe, last time I checked. He's over in Houston. Nice guy. When he first started working at a brokerage, he had, what would say the word right? He talked about the old curmudgeons, a bunch of old guys in there, and they would just rip the shares out of people's hands. Back then, oh, I meant to grab some shares for this week. And I know I've told the story 1,000 times, but it's a good story. And he would chat him up a little bit. The other guys just rip the shares out of their hands, sell them, give them the ticket or whatever, write them a check. But Dick would chat him up a little bit. Hey, why are you selling? What's going on? And then the person would give them, as I've said before, they're getting married, they're getting divorced, womp womp. They're buying a house, starting a new business, they're retiring, maybe they had an unexpected expense, or like lately, it seems like expected expenses are causing us to dip a little further into our trading accounts, right? Maybe grandpa croaked or something. I don't know. The bottom line is, what does all that have to do with trading? Absolutely nothing, okay? So the point I was making with this original slide, I just thought it would work good for tonight, is that people have these big old complex equations they want to use, or they try to figure everything out. Well, how can you figure everything out if you have to figure out whether or not this guy's going to get married, divorced, buy a house, retire, or whatever else, okay? It can't be done. What can be done, though, is you can read what the traders have done in the charts and what they're likely to do, okay? And again, it all boils down to supply and demand. Now, we talked a little bit about supply and demand last week. One thing I want to point out is that supply can create supply and demand can create demand. So if a market starts going down, especially somebody's nearing retirement, okay, they start to think, my retirement is going to suck. F it, I'm out. Okay. And then that might suck in more people to sell. Okay. And then FOMO, okay, on the way up. Dang, this market is going up, even though it shouldn't be. Okay. So the fundamentals might be bad. They probably will be. Your best markets sometimes have the worst fundamentals, which kind of turns that fundamental thing on its head, right? In fact, I often say, someday I'm going to create a trading system, and part of the system is that the stock must have really bad fundamentals. And a lot of people have said, Dave, you already have. So, but it has to be going up. Okay. So buying can beget more buying, and selling can beget more selling. Now, in trading full circle, I talked a lot about the difference between a company and a stock. A company is a physical entity that does things for a profit, okay? And a stock is a piece of paper that's representative, that represents ownership in that company. A stock is not a company is not a stock. People confuse those two things. So you might believe in a company and feel that it's doing great things and going great places, but that's not a valid reason to buy the stock. There's only one reason that you should ever buy a stock. And I often say, why should you ever buy a stock? And people will give me all kinds of answers, but the bottom line is the only reason you ever want to buy a stock is to make money. I was checking out last night. This will probably be another story for another time, but it's kind of like life throws shit at you, right? My wife broke a couple of ribs over the weekend. 2-drink minimum on that story. I think she had 2 drinks minimum too. You know, so there's been a lot of stress with that. You know, is she going to be okay? Did one of the ribs go through her lungs? I don't know why I'm talking like Jackie Mason, but life throws a lot of things at you. And then I was at the grocery store, and the girl checking me out, she saw my tattoo, which has uptrend, downtrend, and sideways. And she was very young, probably, I guess, 17 years old, 16. I don't know how old you have to be to work in a store. And I tried to explain to her, she wanted to know what it meant. I tried to explain to her, it's like, well, I work in the stock market, and this is blah, blah, blah. And she said, I ain't never been to the stock market. Anyway, I'm not sure what that has to do. Kind of went off on a tangent there. But when you buy a stock, you form a relationship between you and the company. And this is something that Tom McClellan, he gave a speech at the American Association of Professional Technical Analysts meeting a few years back in New Orleans, and it was a fantastic speech. And he talks about the fact that when you're buying a stock, you're forming a relationship between you and the company. You expect the company to do good things, right? And most of the companies are on the up and up. Every now and then they cook the books, or CEO chases his secretary around the desk. It gets in a lot of trouble. But for the most part, they have your best interest in mind. You're also forming a relationship with anybody who bought that stock prior to you. And that's what a lot of people don't realize. And as Tom said, and those people will screw you. So accept this one fact and you'll do just fine. you're trading traders and not markets. And that should be to somebody new to trading or to somebody who gets caught up in whatever, or even somebody who's been around for a while like me. If I'm chasing my own tail in the middle of the day, it's like, why am I doing that? Okay. And the other traders are disagreeing with what I'm doing. Well, it is what it is. Okay. I need to figure out a way to get on the same side as the rest of them. But just remember, you're trading traders and not markets. And I told Tom, as I said before, that I really liked that speech, and I asked him for some of the information so I could put it into my course, and I give him full credit, of course. And he goes, as far as quotes, here's another one from my mother, Marion, his late mother, regarding market timing. Everyone uses timing in their investing. Some people buy when they have money and sell when they need money, while others use methods that are far more sophisticated. Now, I know I've said that, I've talked about this quote quite a bit, and I've heard a lot of other people talk about this quote too. And it's one of the best quotes I think out there when it comes to trading. The bottom line is that people buy and sell stocks for a variety of reasons, many of which have absolutely nothing to do with the underlying company. Now, again, as I often say, don't confuse the issue with facts. And that's, you're going to hear that quite often in this series, because there's a lot of things that make sense, okay? And it just makes so much sense, like combining fundamentals with technicals. That makes so much sense, right? But in reality, it just doesn't work. Okay, let's jump into the live crypto. If you guys and girls have any individual pairs you want me to take a look at, we could do that. We'll start with Bitcoin, obviously, and then we'll look at some of the shitcoins. And I do want to take a look too at the bow ties on Bitcoin. So let me just shift gears here real quick. Okay. So here's the open portfolio. It's all in green. I don't have any reds now. Red would mean that I'm in it, but I haven't hit the IPT. So you can see that some of these have lost a little steam, especially tonight. But we'll see what happens. And something like T, I'm going to try to hold on this one for a while. Again, this one got it at $3 a share or whatever, $3 a token or whatever it is. It ran up to 20 something. Now it's back to 17, but it still looks pretty good longer term. And there's the I and J. Now let's take a look at Bitcoin. You can see again, we have some Landry light. Let's get that up in stock charts. And let's take a look at the bow ties there. Okay, so we have 3 bars of Landry light now. And let's take a look at, we'll take a look at bow ties real quick. In proper order. Proper order, it just means that 10 is greater than 20, 20 is greater than 30, and that's for uptrends. And for downtrends, 10 is less than the 20, and 20 is less than the 30. So if you're looking at the bow ties here, and let's take a look at like the last 5 months. So you can see that we've had a pretty good run again in Bitcoin, as you know. And the bow ties went into proper uptrend order back here, way back in October. And they're still in proper order. Now, notice that we have 110 bars, okay? This does not count the magnitude of how far apart they are or anything like that. It just tells you whether they're in uptrend proper order or not. 10 greater than 20, 20 greater than 30, okay? 10 is simple, 20 is exponential, 30 is exponential. 20 and 30 are exponential, 10 is simple. I know you guys here are sick of me saying that, but if I don't say it, I'm going to get emails and a lot of questions. By the way, leave a comment below if you're watching and recording on this or live on YouTube, and I do answer all comments when necessary, of course. But always look at the chart. We've obviously lost steam here, okay? I wouldn't get too excited just yet. But if we dip below 40, I would become concerned. And again, it's been 110 bars since we've had this crossover here, and they haven't crossed back over since. Came pretty close here, but they did not. So far so good, but we are losing steam, okay? Obviously. Now let's take a look at, I don't know when they do the roll. Sometimes they do the roll and then these numbers aren't too impressive, but the relative strength game, again, as I've said quite often, you're just sorting these by the strongest pairs, and then you're trying to find something that's going straight up and buy it. And we're not going to see anything tonight that probably fits the bill. But that's all there is to it. And even though there's nothing worthwhile at the moment, this one might be a little thin. It could be setting up as just a pullback. That's the other thing too. You could use the core methodology, the pullbacks, to trade these things too. And maybe that's what's going to happen as we settle into a market where we're trading stuff like Landry light pullbacks, and that's just simply a pullback to 30 EMA. Speaking of 30 EMA, as I preach, the 30 EMA is probably your best friend in crypto in any market for that matter. Never, as a general statement, never say never, but as a general statement, don't buy anything that's below the 30 EMA. And as we get to some of these weaker pairs, you'll see that that simple rule will keep you out of a lot of trouble. Now, there might be an exception here and there, something in a deep pullback. But for the most part, look, something like this, don't buy it. It's below the 30 EMA, okay? If you're thinking about buying something, make sure it's above the 30 EMA. Look what it did above the 30. Now look what it's doing below the 30. There's supply and demand for you. So as you go through these, I really think you're going to be amazed that something as simple as a 30 EMA can really help to keep you on the right side of the market. Look at this one here, okay? Mostly below the 30 EMA, where's it headed down? Mostly above the 30 EMA, where's it headed? Or where was it headed? Up, okay? Here's a little generic pullback, okay? And I got in right here, looks like I flipped it out and then stopped out. Well, I was way back last November where things were blowing and going. Don't worry. We're going to have another bull market within the next 6 weeks. How's that? I'm going to go on record as saying that. The only thing that scares me is the guy who screams a lot on TV says Bitcoin has topped. That doesn't scare me. That's bullish, right? But then the woman who's quite often wrong started her own crypto fund for Bitcoin. That's got me a little scared, and put 25% of her entire net worth into it. So, how these people keep their jobs, I have no idea. I'm only wrong a little bit, and I lose a lot of clients. All right, let's shift gears and get to stocks and start punching in some individual names, and I'll take a look at those after we take a look at stocks overall. So as a general statement, stocks looking pretty good. Today's action, I was really surprised when I was doing my nightly analysis. Today's action really makes a big deal, a big difference in the markets, even though the markets weren't blowing and going like crazy. They were kind of all over the place. We did have a gap, sold off a little bit, but recovered to close well. But a lot of the sectors improved today. The market was sort of worsening in here, and you can see we've gone sideways. I wouldn't start kissing each other just yet, or let's not start kissing each other just yet, but today's action, very important. Check back often. By the way, since we're down here, uranium's been doing pretty good. Let's see if we can find the spot uranium. Is that the spot uranium? This is the miners, but you can see they've broken out, so in a pullback, that might be worth a shot. Let's take a look at NASDAQ. Decent day in NASDAQ, just off of these multi-year highs, almost there. It's got a ways to go to get to all-time highs, but if you take a look at the Qs today, I think the Qs, QQQ, closed at all-time highs, and I was pretty impressed with this. We're going to take a look at the SIBIs in a minute, NVIDIA, and what's the other one, AMD, another big one, banging out some brand new highs today, so that's looking pretty good. I got long the Qs, just 100 shares, at 319.49, if memory serves. And that was that's been a while. That was on the TFM 10% system. which we talk about quite often. I'm not going to bring it up tonight, but if you go and look at the archives of these videos, you'll see a bunch of those. And this was getting a little nervous back here, but so far so good. 412. So closing in, knock on wood, and I'm not going to brag because that'll stop it in its tracks, right? But we're closing in at 100 points there. Let's take a look at the Rusty. Rusty is kind of just that. It's back into this sideways soup, okay? It did have a pretty good run here, but as usual, follow through is key. It's pulled back. Lots of overhead to deal with. So for now, Rusty's just not getting the memo, but overall things still look pretty good. So getting a question on GBTC setup. Yeah, it looks okay. It looks better than the underlying Bitcoin. And a lot of the run in GBTC had a discount of like 40% or something ridiculous. I'd love to know what it is now. If somebody wants to Google it real quick, let me know. Otherwise, I could do it tomorrow. But a lot of that discount came off, and that's why GBTC ran up so much on the spot Bitcoin ETF. And this is the day it was announced, of course, buy on the rumor, sell on the news type event, right? Okay. See, that's where you confuse issue with facts. Once again, it's like, this should be really bullish for Bitcoin, right? What happens? Well, sans this little bit of a rally here, it's kind of imploded since, right? So Key says, is it set up? Yeah, I think it's kind of set up here. It's just pulling back. I think it looks okay. I would buy it as it goes back up. I wouldn't try to catch a falling knife, though. Gold, here's the gold miners. You can see there's really nothing to do here, kind of all over the place. Gold, the commodity, getting kind of choppy in here. It did have a little run higher, but it's kind of all over the place. I still laugh at these radio guys, you know. If gold's going straight up, why would they bother selling it to you? You know, my father-in-law asked me that once too, you know, and good point. You know, why would they, and I was bullish on gold, you know, because they always ask me, should we buy gold? Should we buy gold? And then they came to dinner once and said, okay, now's the time to buy gold. Well, why would they sell it to us? I'm like, well, hang on, you know, damned if I do, damned if I don't. Hack and ETFs is just off of these all-time highs, I think. No, multi-year highs, so that's looking pretty good. That sector, I'm not sure what exact stocks are in there, but that would be fun. I know your party would be. Let's see if we could see. Is there a way to quickly drill down into these things? I used to be able to do it with the old field, but I can't do it on the fly. But that would be something you want to take a look at. The defense stocks are doing pretty good. You can see so far just pulling back. I don't want to see them pull back much further, though, because we'd be back into this base, but that's looking pretty good. There were a plethora of sectors that do look similar to that. Biotechnology, drugs, so far just pulling back a little bit. Defense looking pretty good. I think this one I was looking at the other defense, but that's one. M&C right here at all-time highs. That's materials and construction. Leisure's doing pretty good. I think leisure is something I probably don't watch enough because it usually doesn't go up. But I think leisure going up is bullish because I think that means people are, and I'm confusing issue with facts. Listen to me. But people feel good enough to spend money on leisure. They must be feeling pretty good and will spend money on stocks too. Transport's not doing so hot. You can see they stalled out in here. They're trying to rally back though. So today's action again changes a lot because yesterday transports looked like they were trying to roll over, and now it's kind of looking like more like a pullback. Semiconductors looking pretty good. I think SMH is at all-time highs, so that's looking good. Look at that. Look at that trend. It's huge. Okay, so that's doing fantastic. Now a couple of areas not so hot. Energies right here at these multi-month lows. If you take a look at OIH within the energies, I'll just punch it up. OIH, keep the stock picks coming. You can see it remains at a pretty serious downtrend. Not seeing a lot of shorts there. Not sure I want to rush out and do a lot of shorting right now because overall things are still doing pretty good. But it is in a downtrend. It is worth noting. I think that's pretty much it for the market and the sectors. Overall, doing pretty good. Check back often, obviously. A couple of days ago, didn't look quite as good. Even yesterday, didn't look quite as good as it does today. But for now, I think you can err on the long side for now, okay? If we take out recent lows and the market starts coming back in and NASDAQ doesn't make new highs, then we could have some problems. But let's cross that bridge when we get to it. Okay. Caleb wants to know about TMUS. Okay, yeah, this is T-Mobile. It's definitely trending. Okay, it's definitely trending higher. It has really, really good volume. Obviously, it's a well-known stock. The first thing that jumps out at me after initially is like, wow, look at that trend, it's huge, is the HV is 9, okay? Let's take a look at the S&P 500. Historical volatility on HV on S&P 500 is only 10, and so the HV on that was 9. As a general statement, you're not going to beat the market with stocks that are less volatile than the market. And here's the thing. In order to get your position sizing right in a less volatile stock, you're going to have to put on more shares. If you go to my website and do a search for Better the Devil You Know, you should be able to find an article on volatility. I would encourage you to read that. And my cutoff right now is once I get into 30, I go really, really fast through my database because it's unlikely I'm going to find anything there worthwhile. And 25 is pretty much my hard cutoff. I rarely go below 25 in the HV. And if you look at some of the stocks we are trading or recently trading, let's see, is it K&F? K&F, HV 32, a little lower than I thought it would be, but it's got an HV at 32. That's probably because we've had this really persistent run here, and persistency, which is a really great thing to look for in markets, can cause the volatility to drop off quite a bit. But I bet if you go back in time, this one was a little bit higher. What else? Let me just think of another one on top of my head. This one eventually failed miserably, but we did okay for a little while in it. So this one got HV of 103. So you can see HVs are much, much higher for the stocks that I like to trade, and you're going to catch a much bigger move in stocks with the higher HV. You're going to compensate. It's better the devil you know again, but you're going to compensate by trading fewer shares. Okay, anybody have any more? Let me just check it on YouTube real quick and see what's happening here. Thanks for sharing the insights. Always so valuable. Greetings from Brazil. Oh, okay. Well, thank you very much. What's the language in Brazil? Portuguese? I should know that. Do you know Storm? I think I never met him in person, but I've talked with Stormy a little bit. I think he's from Brazil. Thank you, Dave. This is a super helpful explanation regarding comparing HV to overall market. Makes perfect sense. Oh, fantastic. See, I do this forever, and I finally reach somebody. That's exciting. Thank you, Caleb. Appreciate it. Prax, P-R-A-X, P-R-A-X. All right, let's take a look at that. Yeah, that looks pretty good, Keith. Okay, let's look at it shorter term. Shorter term looks pretty good. It could use a little deeper pullback. Crazy HV, but not too crazy. Over 100 starts getting a little crazy. So yeah, I like that. It needs more of a pullback, but wait a minute. Volume's a little low. Might be able to get by on the volume. I do find in more recent years that the volume has to be a little higher than it used to be. Used to be able to get away with volume about 100K. Now I find that those stocks are too thin. Okay. Obrigado. Is that you're welcome? Now let's back this out a little bit and see. This thing has a ton of problems. Markets have really long memories. So you've got this big gap down here, then you got this gap here. So this stock's gonna have a hard time getting through all this fluff. So I would toss that one out. I would leave it alone. Okay. All right, any more? And again, I'll check YouTube. All right, going once, going twice. Obviously, I want to thank everybody for attending. I appreciate you taking time out of your busy schedule. Anything you want to answer, David Landry, leave a comment on YouTube. I'll check that out too. Everybody have a great weekend. To those of you who are in my Facebook group, I'll see you guys tomorrow. Thank you so much, and may the trend be with you. You're welcome.